We are back and cooked. At least shit is cooked, man. Uh, yeah, we just like started talking now before we started the pod, and we were both like, what the fuck is going on? Like the headlines, a lot of it is super difficult to follow because like a lot of this news around Iran and a lot of news around like new attacks, it's super tough to verify what comes in. It's super tough to see, okay, is this true? Like, is this a real attack? You see like maybe some posts or some videos about something new happening, a new attack or so, but then a lot of it is also fake and disinformation. So man, it's super crazy, super difficult to know what is going on, but maybe you can help out. Maybe you have some ideas, some things that you want to share that can help out, give a little bit of clarity and order into this whole thing.
Man, first things first, shit's cooked.
Yeah.
It's so over, bro. It's so over. But yeah, as you said, I stopped watching or listening to the news, especially on Twitter, on Instagram. If you
Yeah.
scroll down, it's a lot of fake stuff going on. Mostly fake stuff, mostly fake news. People post Netanyahu is dead. Oh no, he's live. Oh no, it's AI.
Yeah, that stuff.
So for me, I use like market barometers to measure and see if we have stress in the markets and if we have continuation into geopolitical risk, or if we are going to price it out, the geopolitical risk premium. So for me, for example, I look at the dollar. The dollar
Mm-hmm.
is very important. As long as the dollar is holding strength, it's a sign that the geopolitics is gonna continue. Um, because we are now not trading based on a different interest rates differentials. We are trading based on a geopolitical risk premium that the dollar have.
And from the different central banks, I think the Fed is still the most dovish, right? Like,
Exactly. I don't know, man. This is also something that the market is pricing wrong, I think, or what the market got wrong. It's because the market last week is thinking that the Fed is the only or the last dovish central bank.
mm-hmm.
This is why the dollar was not performing well last week, given against the euro. The euro is up 1.3 and the dollar is like was a little bit down. And we are struggling at this resistance level of 125, 130 on the dollar. But I think this is not the story because if you look at the SCP from the Fed, they raised up their inflation projection, but also they raised up their growth projection, telling you, listen, growth is still strong, so we can't cut yet.
Mm-hmm.
It's synthetic tightening that they have done actually. Without speaking any words, the SCP said everything. Growth remains solid a little bit or remains strong that we can't cut. And even Jay Powell slipped when he got asked. He said like we debated it last meeting, maybe a hike is possible. So the market
Crazy.
and the dollar ripped 0.6%, like 60 basis point on that day. Uh, the day after the ECB, all of a sudden, oh, euro is more hawkish, the ECB is more hawkish, even though the ECB did downgrade their GDP
Mm-hmm.
projection from the SCP and lifted up their inflation. So they are pure stagflation. With the curve bear flattening, the DAX is falling, the euro is up. So what the fuck is going on here, man? It
Yeah.
doesn't make sense. So I use this as an opportunity to sell more to sell euros and go long dollars. So I'm short euro USD,
Mm-hmm.
thinking that the euro is gonna crack because growth is not looking good. If they're raising rates, if the ECB starts raising rates, shit gonna hit the fan even more. And
And the interest rate differential won't help out with the rest. Like,
I don't think the interest rate different. We're gonna get back to the buy America trade, you know.
mm-hmm. Mm-hmm.
So this is one thing I'm thinking about. The second thing is for me commodities, bro. BCom, I'm long the commodity index.
Man, it's
This
so
trade,
insane.
this trade and XLE from the Substack portfolio balance out everything basically. Because before we start attacking, once my system flipped from risk on to neutral on the 25th of January, I exited basically XLI, XLB. I exit all the industrials positions, all the pro-cyclical positions. because we
Hmm.
started moving from a risk on Goldilocks scenario into a transitioning period. So for me, it was a clear sign to exit, and I left the both components that are working the best, which is commodities, XLE, and the commodity index. And I think we could maintain these positions going into Q2 2026, where I believe that XLE could continue. We are trading at 60, so it's going to be tough
Yeah,
to
I
get
think
into position now.
yeah, for the commodity thing, like what will be interesting is again, it's back to Strait of Hormuz, but the now the story is also kind of being more talked about, but the whole fertilizer thing, this urea stuff, that if like 40% or so of the world supply of this fertilizer does not come out, then this will fuck the harvests for the next years to come, which will in turn be firstly food inflation, but then also just as a trade, next cycle upwards in like wheat, corn, soybeans, whatever,
Exactly.
where like more you can more regionalize it or localize it depending on where all the fertilizer that comes out of the straits typically goes to. But I think yeah, that's what we might be seeing, what we could see in the upcoming time, like yeah, the cycle
We
shifting in these agricultural commodities,
exactly
cause
we
like
talked about
yeah,
if you remember 2 days ago, me and you we talked about being long corn, taking a long position in corn. So it's looking beautiful on the chart, starting to break out from this
hmm,
downtrend. Um, Man, I'm so pissed because we missed out on a big trade, me and you, if you
yeah,
do you remember the
that
ticker
one,
AGRO.
yeah, it was
We
so
had it on
crazy.
the radar.
Yeah, I
We
like
wanted
months ago, or I think yeah, it was yeah, in end of last year in December. They were trading around like 8 or something, and I found them by chance. I was looking at some portfolios of like some fund, their 13F filing, because they had a large position in another company that I was looking at and had an investment in. So I was just looking at their other holdings because there was like a more concentrated portfolio. So therefore, it's for me personally interesting to look at what other bets they have made, what other trades they have. And of course, like if you look in the 13F, you don't see everything. You don't see maybe all the options positions and so on, but you can get a general look what they have. And then yeah, they I saw that they have a huge position in this AGRO and looked into it, but then decided, okay, I don't know. The company seemed like from a value per base, like good. They have been sold off because they made an acquisition. So if they buy another company, typically they have to spend a lot of cash, and therefore the company or the stock price usually falls on these kind of deals. But they have completed that acquisition, which was an acquisition of a fertilizer company or of a fertilizer producer, because they themselves are fertilizer users and wanted to like have this supply chain integrated into their whole business. And yeah, it was a good value
bad, man.
play, and now it just it just going insane. Like they
Should
put out
went
earnings.
parabolic.
Mm,
Should went parabolic. Trading like at 15 right now, 14.50.
somewhere there.
It's like almost 100% on that trade, bro.
Theoretically, yeah.
Shit's cooked. Shit happens.
Yeah,
Yeah,
that
so
was
I
sad.
think I think you are right on the fertilizer trade. I think it could play for the next quarter, maybe.
Yeah, like
Like over
the thing is, if you take the trade now, you will already be forward pricing that in the future the harvest is going to be less because they don't have so much supply of the fertilizer, and therefore the prices will be higher. But yeah, so this is one interesting thing to look at to play this whole situation. And as from it looks, Trump and Israel, they're not calming down. Like over the week, they started attacking really like energy infrastructure, the LNG field there, the gas field there in Qatar, and it's tough to say, man. It's really tough to follow what is going on and to understand what is going on because
one
everybody,
thing
yeah.
one thing is very, very important. I have read last week, which was like Iran is demanding to sell their oil. They will open the strait if they sell their oil in Chinese yuan, which is
Ah, yeah,
going
yeah,
against the petrodollar system. Again, if you remember, Saddam Hussein tried to do it. He got then
yeah.
Gaddafi tried to do it. He got then Maduro tried to do it. He got and now Iran. So a lot of people are saying right now the US is losing, and it is. If you map it out from a game theoretical perspective, the US is losing
Mhm.
because on the one side you have Russia is making a lot of money now selling their oil, their unsanctioned oil.
Yeah, it's insane.
China China is winning by doing nothing,
Yeah,
and Iran.
it's this quote, this thing, China is not going in and like not doing anything, and is this if you read the Sun Tzu, Art of War and all that stuff, or I actually believe this quote is from Napoleon. Don't stop the enemy from making a mistake or something like this. So therefore it's like, yeah, they stay out of it, they let the US fuck themselves with this, and then yeah.
But I think what I think like the US is willing to do everything they can to defend the petrodollar. So
Hmm.
even if it means to nuke Iran, if it's the last option, they will nuke Iran. So I don't think the US will go out losing on that trade, on that war,
Yeah, I mean, yeah,
Spe-
of course. Like,
especially if
from
it's about the dollar,
mhm.
especially if it's about the petrodollar system. They won't do it.
Yeah, man. Like, in the end, yeah, the difference between forces, difference between powers, Iran, they have no chance. They can do nothing, but they win by only surviving. They don't have to do anything. They don't have to kill any American soldiers. The only thing they have to do to win is to survive. And yeah,
It,
it's tough. It's
the
tough to say.
problem is, it is in Netanyahu's interest and Iran's interest to keep the war as long as possible because for Netanyahu, he doesn't only want a regime change, he wants a full invasion of
Hmm.
Iran
He wants escalation.
because
Yeah.
he wants escalation, he wants to go further on his plan, the big Israel, they talked
Hmm.
about it multiple times. And for Iran, the longer it goes, the longer its allies is making money, Russia, China, and they themselves.
Yeah, they
So
themselves, like they have the highest amount of oil being exported from Iran, because nobody else is exporting and everybody, and they are the only ones who can export it. It's crazy. Also, like the Strait of Hormuz, there have been a few ships now passing through that have this AIS tracking signal on that pass. They don't follow the normal routes, but they follow a route that goes super close to the coast of Iran. And now Iran is being paid to let the ships through. Effectively, the US has fucked up so bad that now Iran is like it's like a toll booth, it's like a ticket booth where everybody has to pass through and only has the like only Iran allows who goes in and who does not. And it's so insane that the US like yeah, fucked up that big that this is the case now, that Iran has effectively really full control of the strait and can enforce like this, okay, you have to pay us, or if you're an ally, you can go through. If you're an enemy,
I
nope.
think it was about $2 million
I think
per vessel,
something, yeah.
something like
Also
that.
getting
So
paid in a dollar, not yuan or something. But
yeah,
yeah,
it's crazy, man. It's crazy. Yeah, so let's move on markets. Let's talk a little bit
yeah.
about more about markets. So we talked about the dollar. One important thing to talk also about is the USD GPY, the yen 160. A key important level, yen dollar 160. The BOJ intervened multiple times at that level. We had the unwind of the carry trade back in 2024 at that level. And every time the dollar is approaching that level, we see strength in the yen and the dollar weakening last week. So this is a level I'm watching for cross asset macro. It's very important in my system. $160 yen. Um, Man, gold, gold and
It's
silver,
so tough,
man.
man. So tough.
Yeah,
Like,
it's rising. Real yields are rising, man. What do you expect? Like I got a lot of people texting me. bro, what's going on? Why gold isn't
Mm,
protecting me
mm.
from geopolitical risk? What's going
Yeah.
on? And we said it multiple times. Like even you said it last time on the pod. Guys, gold is not the hedge. You hedge geopolitical risk by taking long oil, not going long an asset that have rallied
Yeah,
200%
that is the
in three
fucking thing.
years.
Like it is insanely up. So yeah, man. But now
We
this
are
looks like also a crazy move if you look on the gold futures. These last few days they all have been brutal, man. So yeah, wouldn't want to be
like
long that shit.
gold, silver is tough because metals like you have rising real yields, which is on it on face value monetary contraction that's taken place. Liquidity is getting sucked out of the system. We talked about multiple times, plus our liquidity model suggesting falling liquidity, which means leverage has to be taken out, leverage taken out, a lot of gold leverage position, a lot of equity leverage positions, a lot
Mm.
of Bitcoin leverage positions,
But
a lot of
when talking about Bitcoin, which is a lot of people, everybody has their own opinion, everybody has is talking shit about whatever, what are the reasons. The Bitcoin people are saying like, oh, it's the crypto
the,
gold,
the
whatever.
4 year cycle, the four
Yeah,
year
yeah, yeah.
cycle, bro.
But what if you're talking about like deleveraging and unwinds and so on? Do you have any theory on how why Bitcoin is performing the way it is?
Like if you look at the chart, we have been trading in a range from
Yeah, in the range, yeah.
73,000 to the lows, upper 60s. Um, Man, we already fall down like by almost 100% from 125 to 65, I think was the low.
Mm, yeah.
So falling
No, actually
liquidity,
60 was the low, like
60, okay, almost 100%,
yeah,
almost 50%, sorry.
half that,
So
yeah.
rising interest rates, rising real yields, falling liquidity, deleveraging taking place all over the place in gold market,
Mm.
metals market. Now we will see it soon in equities. Man, I don't know. This is my opinion on Bitcoin. Bitcoin is no touch zone for me right now. The
Yeah, man.
credit cycle has been contracting, especially now if you get a rate hiking cycle, which is actually which got confirmed by all major central banks, the Fed, the ECB, the BOC, the RBA, which they hiked rates, the RBA to 4.1%, and the BOJ, and every central bank, if you look at the SCP or the conference, it was hawkish. It was, listen, it's a move from being on the dove side toward the hold, aka hawk side. And depending on how inflation will come in next month on the prints, either the rate cuts are going to get confirmed, the rate hikes are going to get confirmed, or we're going to stay on the hold line. But the easing cycle is officially over. So what I'm
Mm-hmm.
trying to say is the most important thing to look for next month is going to be the inflation print. Our projection is sitting about 3.3% for 1 month. Like the projection for 1 month analyzed or after war, it's going to be 3.3%. And right now, the markets, the SOFR curve is pricing like 10 basis points of a hike in 2026. I think if we beat that number and we come above 3.3, like we get 3.5, you will get for sure, one rate hike baked into
Mm-hmm.
the curve this year. And by the way, Trump can't do nothing about it.
Yeah.
Trump, like even Paul said it, if they don't get Warsh uh,
You will stay
confirmed,
longer.
he will stay longer. And Paul won't cut rates, man. So
No, no, man.
and in a rising real interest rates environment, higher inflation, growth is still solid, but it's weakening or staying flat. It's a pure stagflation trade, pure stagflation scenario. And the best way you can do it is reduce your exposure, be long commodities, be long the dollar. This is why we trade cross assets because if the equity market is not providing any opportunities, I switched to trading bonds. I'm short TLT. I shorted at 91 after the December FOMC in 2025. This is why we switch between cross assets. And or you do it the way you do it, T. Like you dive deep into these themes and try to trade the micro, find
Yeah,
good
like
companies.
the micro stocks, yeah, the companies.
Exactly.
Yeah, like
The fertilizers.
agro, man.
Yeah.
It's so insane. I the when the moment when I saw the all the connections, why this stock was like would have been like perfect for this war scenario. It was like I was sitting there, man, how did I miss this? How but yeah, it happens, man.
Al- Also, another way you can play this by going long tips,
Mm.
which are the Treasury inflation
Yeah,
index.
inflation protected.
Yeah, inflation protect. I always forget the name.
Yeah.
They will get always after CPI, after you get the print, they will get pulled to par, so they will get pulled to the inflation numbers. But I don't like cash. I, I love active management, try to find opportunities where to allocate the best. Man, it's
Mm.
tough. Man, oh man, it's
Yeah,
tough.
yeah.
So if I
That was
can say
also
one
over
thing,
the yeah, yeah, go ahead.
just reduce your exposure, man. That's it.
Yeah.
That's it.
Wow,
And
man. Yeah.
if you remember, we talked about Marsh OPEX. Let me
Hmm.
touch on this one too. We said it after usually Wednesday when the flows, when Dana and Charm peaks, we usually see markets weakening because of the dealer hedging flows into futures and other uh, like ETFs, other products and stocks. And it was this OPEX was so important. I don't think a lot of people knows it. If you look at the chart on the ES futures or in the S&P 500, you will see how big the volume spike it was because it was quadruple which means it
Hmm.
was option expiration on the futures, option expiration on the ETF, option expiration on the stocks. So a lot of CTAs, a lot of market makers had to do and hedge their books. So what happened was I was looking at the chart yesterday because I was intraday trading. I wanted to hedge by intraday trading. Man, it was basically was very easy because once we broke the 650 on the S&P 500, a lot of market makers shorted into the market because it was the last negative gamma node that we had. And then they started shorting because they have to hedge their books into the expiration.
And the further down it goes, the higher the delta gets on their position.
Exactly. And the more they have to short, and then you
Yeah.
approach the next negative gamma, then they short even more, and then it's a deleveraging. So after the market closes, you see a relief rally. We bounced. It wouldn't surprise me if we bounce again on Monday, but there is weakness. There is a strong case for weakness from macro for equities, especially if we get rising interest rates, man. Even
Mm.
if earnings remain solid, only the multiple contraction that we will get from rising real interest rates and rising the short end, it will kill stocks. Like imagine the SPY goes from 24 forward PE, 23 or 22, down to 19 forward
Hmm.
PE. Like S&P will lose it all.
Yeah,
So try to
it's
short
looking really grim.
tactically. Try to short tactically if you can. I'm short Nvidia 178 or around 177, 178. Um, because also I think if China invades Taiwan,
Oh
Nvidia is gonna
man,
flush down 50, 60%.
nobody's talking about it yet. Like, mm,
Nobody's talking about it.
yeah, yeah, nobody's has that on the radar. Like,
Again,
yeah, but first
I,
we have to wait until first until Trump and Xi until they meet, and then
exactly.
see.
Again, we always said alpha is earning quiet positions before the board looks exciting. So if nobody's talking about it, this is perfect for me. I size it
Hmm.
up. I can get into big size and accumulate my size. And once everyone's talking about it, I basically exit the trade because I made the money. So if you map it out from a game theoretical perspective, I think it's the best opportunity for Xi to invade Taiwan now. because the US is very, very, very focused on Iran, the Middle East, and they won't get a better opportunity, in my opinion.
Yeah, I also think that though Trump has fucked up the global order in such a way, the global alliance schemes or the global how everything works together in such a way that after Trump, everything is going to be restored. So it will be worse for China to take over Taiwan, for example. And now with Trump, the whole alliance of the West is so like not disorganized, but so it's such in like a difficult state right now, difficult positions. It's eroding. That now, yeah, now they have the
Be,
best shot, I guess.
be honest, I don't know if after Trump things will be restored, because once you lose power, it's very hard to gain it back. You know,
You mean
it's
trust?
same also power, trust and power. Once you lose power, it's very hard to restore. And China is gaining now the power over with the relationship over the US. So it's the same as lending. This is why also a lot of people talk about private credit and all that stuff. It's easy to lend money out, but it's very hard to get it back. So you know what I mean? So it's easy to lose power, but it's very hard to get it
Mhm.
back. It's
Yeah,
easy to
okay.
lose trust, but it's very hard to get it back.
Yeah, man, we gotta see. But I think that's a wrap. That's a little overview here. What's been going on and some I think interesting thoughts for anybody listening and watching. Uh, a few thoughts of things to look at. Some advice for positioning for what things to look out for in the next couple of weeks and months and this quarter and this year. And yeah, with that being
No
said,
advices. No advices. We are just
oh
chatting.
yeah, yeah, of course.
No advices,
Just
bro.
of course, we're no advice on anything. It's just chattering. But yeah, well, I think with that being said, um, I think that finishes up. Like
Take
so,
care,
we'll see
everybody.
everybody at the next one. Bye bye.